We've got some breaking news for you from our very own Charlie Gasparino tonight. Monsanto's board is close to approving a $129 share bid for Bayer after bankers complete the final due diligence on this deal. The deal will combine Monsanto, known for its genetically modified crop seeds, and Bayer, the German manufacturer of a wide range of pesticides, of course, as well as aspirin. When you put the two together, it creates an agricultural giant with a specialty in seeds and pesticides and an annual estimated sales of $67 billion. Now, Bayer's board is expected to approve this deal as well. In the meantime, if you thought the coast was clear yesterday, well, you're wrong. The fact is, after airy calm all summer long, we are now in the eye of the storm as stocks took it on the chin once again, with the Dow Jones Industrial Average losing 258 points. Now, I don't buy this is all about crude oil, which did drop on a report of a prolonged supply glut. I think some of this is the result of poor and conflicting comments from the Federal Reserve members, but also the fact is, this market has been grappling for leadership for a long time. The market needs a catalyst, and it's not going to be bad news being good news. Speaking of which, I do like the idea that the Dow held above 18,000 today, also held there on Friday. In the meantime, crude is up in the aftermarket. You did get some good supply numbers there. But the big question is, the bigger overarching question is, what's going to spark this market, or has the correction finally begun? Joining me now, Suhail and Ross Gerber. Ross, let me start with you. Listen, we're waiting for the pullback. It's inevitable. It's got to happen at some point. Maybe the market's just looking for a place to pull back and maybe a little bit pricey here.
Yeah, I mean, it's that time of year, right? Charles, it's September, October. It's never really great. We've got an election coming up where nobody can say with any confidence what's going to happen, and the policies are so different among both candidates that we can't really accurately predict what's going to happen. So what the catalyst is going to be for this market is the election ending. So we just got to bear through a little bit higher rates. The 10-year moved higher today. That was also one of the catalysts to the decline. And we're just going to have to accept this shift where I think the bond market rally is over, but stocks are actually in a good position to really rise over the next 6 months if you're patient over the next 2.
Yeah, Suhail, a lot of people believe that the outcome of the election could actually rattle the market. In fact, no matter who wins, that there's still going to be a lot of question marks and unknowns. And as far as the bond rally being over, what happened to that massive great rotation? We've been waiting at least 3 or 4, maybe even longer years for it to happen.
That's exactly right. The election, no doubt.
Oh, sorry.
Oh, sorry.
Suhail.
Go ahead.
Suhail, go.
I was going to say, the election, no doubt, will have an effect, and that's why it's on the market. That's why it's so crucial that the House and the Senate remain in Republican hands, because business needs consistency. They need to know that the government's not going to be overreaching, and that even if the White House goes into big government mode, that there is a safety there in Congress to stop the overreach of various agencies, including the EPA and others, that really have put their foot on the on the brakes, stopping our economy from really moving full forward as it should.
Right, Ross?
Well, yeah, I mean, I do think that the government has been a negative for business for some time under Obama. So I do see either candidate actually being an improvement personally. And I do think the market's going to be happy because there is certainty that the election is over. And this election has not been a positive, overall discussion about the future of America. So I see this as a positive.
So, I think this is going to actually, I kind of remember this in 2012 as well. Not necessarily uncertainty, but just the daily reminder that maybe America, maybe we don't suck, but certainly we're not doing all that great. And everyone's promising us the moon. Is that enough to get us over the hump? Because what about other things that matter? We're talking about the Fed. We're talking about consumers. We're talking about wages, which finally may be moving higher, and an overextended stock market that needs to justify its valuation here, Suhail.
No, absolutely. I mean, I do fear that we might have something of a perfect storm with, slumping crude prices and the Fed giving all kinds of signals one week, changing them the next, and just the uncertainty surrounding interest rates from the Federal Reserve. There needs to be some consistency there. And then you have the issue of our political management and leadership of our country. I'm confident, though, with strong leadership, particularly from Congress. We always look to the White House for leadership, but sometimes it's overlooked that if Congress can provide that safety, then I think the markets will react. They'll have confidence going forward, and we'll continue to flourish.
That would be breaking news. Congress grows a backbone. All right, guys, let's leave it there. Appreciate it.